Were you surprised at what we heard out of the Bank of England today?
No. Nope.
What?
Brexit, after all, was not the Lehman moment that some of the great and the good had projected, and there was no need for urgency and no urgent action was taken. But, you know, I think it's helpful from time to time to look back and see what our masters at the central banks have achieved over the decades of manipulations and interventions. Once upon a time, the pound sterling was worth 1/4 of 1 ounce of gold. 1/4 of 1 ounce. Today, or almost today, the value in gold of the pound sterling, and now I will consult my notes, is 0.000994 ounces.
Wow.
So there's been a 99.99% devaluation of the pound in terms of gold since 1931, and people have become inured and desensitized to these constant interventions, to the manipulations of interest rates, to the suppression of interest rates, to the purchase of government bonds with money that didn't exist until our monetary mandarins conjured it from thin air. But that is the regime.
Yeah.
And as we talk about what the Fed will do next week, as we talk about what the Bank of England has not done today, I think once in a while step back and say, what is this?
Yeah.
My friend Paul Isaac calls this settled pseudoscience, the settled pseudoscience of central banking.
Well, you're right, and that's why people are saying, look, there's manipulation here.
Right.
And you mentioned the Lehman Brothers moment. Today is the 8-year anniversary.
8-year anniversary.
Of when
doesn't time fly?
Lehman failed.
So,
Mike.
Jim, big fan of your work, and looking back 8 years now, I think the number is roughly 672 central bank cuts globally since Lehman failed. Like
wow,
a lot of,
well, either we need 673 or fewer because it's not working.
Right. Well, that's kind of my point so far. But if you look at the equities market, especially here in the U.S., we're right near all-time highs. So from that standpoint, it has worked. My question, though, is if at some point it turns out the Fed or the Bank of Japan or the ECB, somewhere, someone is just pushing on a string, that it doesn't work, that they actually call them out on it, can that cause a I mean, what happens then?
People have been buying government bonds at negative rates of interest. Now, what this means to ordinary, intelligent people is when you buy a new car and drive it out of the lot, it instantly loses value, right? That's a negative yielding bond. As soon as you own it, you're a loser. Mm-hmm. Never before in the history of interest rates, which goes back 5,000 years, have we had this particular setup in fixed income securities. And people have forgotten, I think, or haven't realized just how radical, how unprecedented is this marketplace in government bonds.
Well, today,
so it's not working, in short. Yeah.
And today we have a market where I buy bonds for capital appreciation and I buy stocks for yield. I mean, that's completely insane. And yeah, I mean, it's worked with stock prices, because if we were to look at the actual keep the PE ratio constant, with all of this monetary stimulus, given that we're in a corporate profits recession, the S&P today would actually be about 20% below where it is if we hadn't had all that monetary policy induced inflation and how much money you were willing to pay for every dollar of earnings. But is that really something that we want? Is that really contributing to a healthy economy, just to have stock prices going up when we have a recession in capital expenditure on businesses? We have a recession when it comes to corporate profits. We have a recession when it comes to CapEx. We have a recession when it comes to durable goods.
I agree with you completely. And I think that my question for Jim would be, can this end? So to Lenore's points, I think she's completely right, and I think the market does need some sort of correction to get this excess out. But can this end well? Can the Fed extract themselves from the market?
One can't dogmatize about these things, especially when something is unprecedented in 5,000 years of history, but it seems to me the odds are against a happy ending. When there is the merest intimation that central banks are stepping back, there's a terrific rumbling in these markets that, as Lenore says, manipulated to the upside. It seems to me our politics, as much as our economic pronouncements, give you insight into the consequences of these asset manipulations. People feel as if it's unfair, as if Greenwich, Connecticut shouldn't be the only place in the country that's doing great, right? So,
what is your feeling on the backdrop right now of the economy? We're here 5 minutes away from getting the retail sales number, giving us another window, a monthly window into the consumer. How would you characterize the backdrop right now?
I think it continues to sleepwalk. The economy does, if one can invoke that. I think it's kind of meh, as they say in Brooklyn. M-E-H, meaning not quite bad.
Yeah.
And certainly not good.
So it doesn't give any...
It's what our economy lacks is the characteristic American dynamism that I think people are searching for in our politics. I'm sure they'll find them in our politics, but I think that's what people, are searching for.